out there, sectors all across the board going up, commodities dropped in unison, but Netflix spoiling things after hours. Let's check it all out. All right, so it's a tale of 2 days today, as again, the bulls were in absolute complete control all throughout the day. Ideal day, bull flags on the hourly, closes up at the highs, and then we saw Netflix spoil everything. So here we have on the S&P 500, we headed into this morning watching the futures chart on the 4-hour time frame. We were right here heading into the open, scouting a 4-hour higher low, and knowing the burden was on the bulls to prove to us with the trend change that the daily bounce was underway. And they did, and it was a very strong day. And we had the hourly bull flag here into the end of the day confirm. But again, here is the Netflix after hours reaction where we're seeing a big drop. So testing the hourly support here, it is a double bottom at the moment, but definitely a big setback overall. We broke also, looking at SPY, we broke the high of Thursday, which was a complete bear control day and some significant bear defense. We broke that resistance. So again, we know the past couple of weeks, we've been scouting a weekly higher low as the most likely scenario. And today, we started to shape that up. That being said, again, we have to see how we trade tomorrow because it's essentially making today's bull move tainted because we can't trust it right now because there's a lot of tech names down after hours. So S&P 500 here, SPY, we will need to change the daily trend back to the bulls. So wherever this move does top out, we will need to hold the low and then break to change the daily trend if we're going to have confidence that a weekly higher low has been set. And again, as I've been saying, I would not be surprised to see a tightening weekly range into the May FOMC 3 weeks from now. 3 weeks? Yes, roughly 3 weeks. No? Yes. Something like 3 weeks. So, burden on bulls still. They need to essentially, they'd have to prove to us, can they recover from this setback after looking real good today? And the NASDAQ was the same thing. 4-hour trend change confirmed. The biggest difference here was that QQQ did not break daily resistance. So QQQ's daily resistance here was 347.69, 347.43, 346.97, essentially a triple top. And we pulled back, or we topped out today right at that level. And then now after hours, again, big drop with the Netflix reaction. And the NASDAQ lagged behind the S&P 500. We had some clues this morning to be looking bullish. We had the S&P 500 breaking key resistance first. The NASDAQ then followed. We had the QQQ bulls standing out with no help from Apple. Apple was a laggard, and eventually Apple broke bull and helped push QQQ further. But there was no help from Apple, and QQQ was still showing up for the bulls. And we had all of our major sectors at the high. Again, the videos, the amount of times that I said when we were in a bull market, pay attention when all of our major sectors are at the low of the day at the same time. It needs to be a big flashing red flag. Pay attention. So when we're in a bear market, or whether you want to call it a bear market or not, I don't like those labels. We're in a weekly, a weekly tightening range and a daily downtrend. So we've been in control from the bears, by the bears for the last 2 weeks, very clearly. And today, this morning, was the first time IWM, XLF, XLV, QQQ were all at the high of the day at the same time. So just like it needs to be firing off the red alert when we're in a bull environment, and that happens for the bears, it needs to fire off a signal when we're in a bear environment, and it happens for the bulls. So the bulls then were able to keep their control for the rest of the day once that started and gave us that indication first thing. So those were just like a few of the puzzle pieces that had us looking bull on the morning. But the NASDAQ unable to break resistance. So what the futures chart's going to have to do here, it all depends on tomorrow. Again, we need that information, but just a daily lower high at this point. So we are not as confident in weekly higher lows shaping up unless we can set up a big enough bull move to create the space for a daily trend change to try and take place. Netflix, here's your reaction. So just absolutely crushed. And they lost subscribers, whether it's related to Russia, whatever, but down 26% here after hours and still struggling to find a bottom. Trying to get a little bit of a move going here, but still overall very weak. So this is dropping Netflix now down to levels from a very long time ago, 700 to 256. So from the all-time high, We are down 63%. I can remember years ago saying it'd be very interesting to see what happens the first time Netflix loses subscribers, because you know it's going to happen eventually. There's only so many people on the planet. So very fascinating. And it's just a monthly, complete, fall apart chart. And we're going to be heading towards monthly oversold conditions. We can see 252 is a previous level. So we're holding that at the moment. But bears have complete control on all time frames for Netflix right now. And on any bounce, we're just going to be scouting an hourly lower high. And again, just looking at that reaction for Netflix, and you go down the tech sector, there's Apple after hours, Facebook after hours, of course, anything with streaming services, Disney getting hit after hours, but overall, the tech sector taking a big hit and essentially giving back, 3 hours of hourly bull flag work and the bull move into the end of the day. Gave that all back. So we'll have to see how tomorrow shapes up. SMH, bounce day, key resistance, 248.11. I assume we're down after hours here as well. Not much of an impact. Have to break 248.11 to start creating the space for an eventual daily trend change attempt. At the moment, it's a double bottom at our fear low. And we're watching SMH divided by QQQ to show us relative strength. It's been a bit stronger than QQQ the last couple of days. And again, what's important for me, I think I've said it and again 8 times this video, QQQ divided by SPY. So it led on the bounce. It led on the way down. We have to see QQQ and tech leading on the way back up again. And what this Netflix earnings reaction is doing is having a lot of tech names say, uh-oh, and pricing in a bearish earnings reaction of their own. Not a full bearish earnings reaction, but what we're seeing after hours is the tech sector pricing in the potential for negative earnings reactions that we're going to see as they report over the next couple of weeks. So I need to see this QQQ divided by SPY chart, this ratio chart, continue to show strength if I'm going to have confidence that a weekly higher low is shaping up. So that's just another little piece of the puzzle that I'm keeping an eye on. Want to see QQQ stronger than SPY for confidence in weekly higher lows. Tesla daily bull or daily bear flag being negated by seeing the bull break of 1026. They've got earnings after hours tomorrow, and that's going to dictate whether our weekly higher low is set and we're heading back up towards 1153 resistance, or if it's a bearish reaction, I'll be looking at it from a monthly perspective. Our monthly lower high will be set, and we did that back here. All-time high, monthly higher low, lower high, equilibrium. And so here we got the same thing. All-time high, monthly higher low. If it's a bearish reaction to earnings, it'll be a monthly lower high, and we'll watch for a potential tightening range again, very similarly, but it all depends on what the earnings reaction is going to be. But fending off the bear flag today. Healthcare. So healthcare, still weekly consolidation, healthy. No red flags here. We're coming off the all-time high. The daily downtrend confirmed yesterday, and so far it has 0 follow-through. There's a base of support in the 136s that we did hold. So here, 136.45, 50, and yesterday it was 53. So that's now a little triple bottom in the 136s, but anything under 140.15 is just a daily lower high. So no red flags on the weekly consolidation, but we're also not confident in a weekly higher low being set just yet. Need to see, again, the bulls make a bull move up, higher low, confirm a daily trend change back to the bulls. Financial sector going up in response to earnings. Key resistance from here is 38.16. They're trying to shape up a weekly higher low. Again, we need the daily trend change. Constant reminders. We're looking at the same things on so many names and so many different time frames. We have to top out wherever that's going to be. When we lose the hourly uptrend, we look for a daily higher low, and then can the bulls confirm the daily trend change to give us a convincing weekly higher low? That's the question that remains to be seen on most names and sectors. IWM is negating the daily bear flag. Still have to break 202.37, but if we do, that confirms the daily trend change to the bulls, and that gives us the weekly higher low. So bulls standing out stronger. It's one of the few sectors that didn't break the low of last week to start this week. But can we break resistance? IWM standing out a little bit stronger. And again, just as a comparison, IWM divided by SPY, still a lot of work to do. Relatively weaker overall. But today stood out. with a solid day. Biotech sector still weak. Hourly trend change to the bulls needed. We hit a fresh low this morning. Solid hourly bounce, but no trend change. If we change the hourly trend bullish, we zoom out. We scout anything under 90.92 to just be a daily lower high. So because of that big drop yesterday and big setback, the bulls have a ton of work to do on XBI. It's clearly one of our lead bear sectors. We know the cannabis sector has been a lead bear sector, so it's certainly there as well. Semiconductors are definitely still a lead bear sector. They're trying to change that, but they haven't proven enough yet. So that is what we're watching here on our weaker sectors. But again, you confirm the hourly trend change. We're just going to zoom out and scout a daily lower high. Tons of work for the bulls to do. So I was watching yesterday. I forget if I mentioned it in the video or not, but the starting signs of stocks trying to bounce, the starting signs of commodities pulling back. And so I was watching to see, I did talk about it. And I was watching, are we going to see an inverse relationship now? And today was a glaring yes. The question is, how long is that inverse relationship going to remain? Big bounce day in stocks, big pullback day in commodities. And I haven't seen commodities as a whole correlated like this. And I'm talking gold, silver, oil, natural gas, all of these things correlated together this significantly in a while. So it stands out. And again, it's a correlation that is now in place, but it will change. That correlation, it could last 2 days, it could last 2 weeks. We don't know, which is why we're constantly observing and comparing and watching correlations to get the information as to when things are shifting. So in the commodity space today, number one, we still got a real strong dollar. It's up at the highs. Zero sign of weakness in the dollar. Gold, big pullback. So for me, the fact that gold and silver and miners did not bounce from hourly oversold. Again, when you are in a strong uptrend, hourly oversold conditions is bought up. Bulls say, all right, here's my chance. I'm making an entry. And that marks your daily high or low in many instances in your strongest uptrends. So when you see hourly oversold conditions lead to a bear flag and a lower low, it's a red flag. This is not our strongest kind of uptrend. We do not have a significant amount of dip buyers down here. So for the metals and the miners, for me today, this significantly increased the probability that a weekly lower high and tightening range is coming. So high, low, looks like a weekly lower high is shaping up. 3 more days to go. But again, the probabilities increase. If I was looking for a weekly lower high and I was 55% sure that that was going to form yesterday, after today it's 75%. So again, it's not game over. We could form a tightening weekly range and then break bull. And we could also not form a tightening weekly range. We still need more proving from the bears. But this is what we're watching here. And I'm not going to add any metals positions as long as we're in a tightening range. If we tighten up and then break bull, I will add to positions. And silver is the same thing. So potential weekly lower high shaping up and a big drop day today. Oil, big drop day today. Is this a weekly lower high on oil? Sure looks like it might be shaping up, this equilibrium here. I'm on CLM 2022 now, which is the June futures. But we've got our high, low, lower high, higher low. Anything under 11, make that 113.51 is just a lower high. So a tightening weekly range in oil. It's been tightening for months. A potential tightening weekly range in metals. Let's look at the miners. We forgot to look at the miners. They pulled back pretty notably on a daily. Again, still a daily uptrend. Hourly, oversold bounce did not go well. We did play this bounce. I played this bounce on the live stream first thing this morning, but was fortunate enough to exit 80% on that initial move up. If you go 1.5% with no trend change, I'm going to take some profit. And so I just took 80% profit and then stopped out the 20% on the new low. But watching for a daily high or low, cautious of the potential of weekly consolidation. And if I am a bear, what I want to see is another red day, and then I want to scout a daily lower high. And that's what I talked about with natural gas on the hourly yesterday. And that's what we got. So yesterday, during the video, we were right here. Say we know we're looking for an hourly high or low, but the pullback size is big enough to scout the hourly lower high to be the result of the next bounce. And then we absolutely rolled over. Congrats to the bears. We pulled back massively. And we're in an hourly bounce right now. But that is the trade style. The daily chart for cost had that trade set up. Bulls played defense and had a key support hold today on cost. The low here was 257. Make that, my numbers are off today, 578.76. And we held that by less than $1. So if that level breaks, you confirm a daily downtrend into weekly consolidation. If that level holds, the daily uptrend remains intact. So obviously the wind was at the back of the bulls today with a very strong broader market, but defense was played, bulls held support, and they keep control. So today was definitely a red flag for bears on cost. But why I bring this up is it was the same setup. Big enough daily pullback to scout the lower high. Bears just failed to follow through. So on the hourly for natural gas, big enough pullback to scout the lower high. Bears did follow through. So now a little bit of trade review. Some good things, some bad things. So I had a good trading day. And this is frustrating because it ended on a sour note. And I didn't do anything wrong. How can I lose money when I didn't do a thing wrong? So I had a solid trading day. Again, the bull miner bounce. I had a bunch of, break even, small little stop out trades mixed in there as well. But a couple major trades that stood out. What am I highlighting here? So AMC, I'm keeping an eye on AMC. So what I was doing, if I'm going to take a trade midday, I need to be very confident in the most likely scenario. And that happens plenty. You'll get a 15-minute equilibrium, or you'll get, in today's instance, I'm confident looking for hourly higher lows on hourly consolidation because of the very strong start for the bulls on the morning. I know that hourly higher lows is the most likely scenario midday. So I was scouting for hourly higher lows. I looked at AMC, and thanks, special shout out to TheChartGuys members, because again, I had no eyes on AMC, but, oh God, I'm not gonna be able to pronounce it. Mwai on the go pointed it out and said, okay, we're building a base here. We're getting tight on the daily. I'm looking for a weekly higher low as the most likely scenario here after this significant volatility. I'm looking for a weekly tightening range. All right, we're building a base of support. I'm interested in the bulls. We started strong. I know we have a correlation to IWM to be aware of. As I'm watching this midday and scouting an entry, the hourly bull flag on AMC was stronger than IWM. It was stronger than SPY, stronger than QQQ, stronger than any other name that I was looking at. So that gave me confidence. Okay. I then also on the shorter term timeframes saw the bear break with no follow through. We know flags are breaks with no follow through. If you see a big move, you confirm a downtrend. The downtrend does not follow through. Scout a flag. So we broke support by 3 pennies, and then we held support by 2 pennies, and there's your hourly bull flag. So I recognized these things and said, all right, I'm looking for a midday trade. An hourly higher low is the most likely scenario. And I was looking at the 2-minute time frame because this bull move had just taken place. This bull move right here. So I said, all right, we're building a base of support right around 18. And this move just took place. I wanted to enter on a 2-minute higher low, and I got very little consolidation, but I just said, all right, I'm gonna use a position size where if I stop out under $17.99, because the premise for the trade is our hourly higher low is set. And generally, if you're playing a bull flag, if you're too early, you gotta be cautious because again, the bull flag is shaped by a bear break with no follow through, so you can't put a tight stop. But it gets to the point where I say, okay, that's either the low or I am wrong and it's not a bull flag. So I then would have used 17.98 as my stop once we got to that point. So I used a position size where I said, all right, I'll take a 20-cent loss. That'll be acceptable. And so I just bought at 18.18, and then we very shortly after got significant follow through. And I did a little bit of positioning. We had an 18.69 resistance level. So one thing that I'll do is if I want to be a bit more on the cautious side, so here's an example where this was just a short on CGC that I covered for an insignificant trade. So AMC, I sold half at 18.55 here on this pullback. And there are many times where I'll sell a bit. And then if the bulls prove to me that this consolidation is just fine, there's no red flags, I'll rebuy it at the same level and say, all right, let's see continuation then. So that's me just being a little bit cautious. All right, I'll take half profit and then no red flags, healthy consolidation. All right, back in to try and see continuation of this move. So I sold half at 18.55, had a little break-even Twitter short attempt there, insignificant trade, made a penny, and then rebought my AMC position 2 pennies lower, essentially the same thing. Because I saw this consolidation, I said, all right, well, we're tightening up. There's no red flags. We're holding 2-minute EMA 12. Let's see if we can break 18.69 resistance. We then got another leg up. So I then take some more profit off. And in the end, didn't want to swing a position. I'm back in day trading mode and swinging positions less, which I like. And so I ended up exiting everything, probably in the 1860s average by the time I was out both positions. But point is, finding a midday setup. And then it happened for natural gas as well. Natural gas volatility is coming this hour. 5-minute cannot get tighter. Scout equilibriums midday. The tighter, the better. And get comfortable with trading equilibriums. So I knew a break is coming here. I knew volatility is coming here. How do I know the direction that the break is going to occur? I don't. I determine probabilities. So what sways my probabilities on this tightening 5-minute range? And again, I said that at 132. And at that point in time, price is right here. We know volatility is incoming. You cannot get tighter than this. So why did I go with the bull side? I made a bull position, entering on a 5-minute high or low, trading within the equilibrium. So why did I do that? The reason is we were in hourly oversold conditions. So for me, hourly inside bar, I'm favoring a bull break. I am looking for an hourly bounce to take place from oversold conditions. Now, gold, silver, miners, oil, all struggled for the hourly bounce. What if natural gas struggles for the hourly bounce? That's entirely possible, but natural gas is coming from a monster breakout, oil is coming from a weekly tightening range, and metals are coming from a weekly tightening range. They're not the same. They're not created equal. The hourly oversold bounce for natural gas has a much higher probability because of the preceding price action than the tightening ranges of the other commodities. So I chose the bull side, made an entry within the equilibrium. That's when your best risk and reward is found. Because if I'm entering on consolidation here, and I was trading Boyle, another note I'll talk about in just a moment. I was trading Boyle, but I was just trading the Nat Gas USD chart here. So entered on this consolidation, and I would have stopped out had this level broken. And then once we got the bull break, I moved my stop up for the next 5-minute high or low. Boyle, I have not traded that in forever. And it's an important lesson to be comfortable with the tickers you're trading, because as soon as I market bought Boyle, the slippage was 1%. My fill was 1% higher than the last tick, which is a very wide bid and ask spread, and it's more than I'm used to. Fortunately, I know that it's a leveraged ETF, so I was using a smaller position size already, but that's just a reminder that it's always much easier trading if if I trade Tesla 150 times. I know exactly, I can do the math in my head so easy. I know what this round share number is going to give me. I know this many dollars moving on Tesla is my day maker, is my day loser. It's all instantly saved up in there. But when it's a new ticker, it takes some adjusting. And the analogy that I give is you're dating a new ticker versus, your long-term partner or your whoever you're married to that you trade on a consistent basis, but then you go around, you date other tickers that have other volatility, but you got to get comfortable. And it's always better when you get comfortable. And so that was just an example. It was whoa, okay. Just a little heads up. Yep, I'm not familiar with this ticker. Gotta be extra cautious here. So I had a good trading day. And I started feeling my flow state coming back, which is always nice. And then after hours, Fidelity did up. So I was trading the Netflix oversold bounce here. And granted I wasn't just trading. I wasn't just making an entry because it was oversold, because it's an earnings reaction, but I saw this absolute monster drop. I had a great fill. I was watching the 15-second time frame. I had a great fill and filled in the 282s, bounce underway, and great. Give me my win. Give me my $10 win. Place my sell order. Sell order is just sitting there, not filling. Price is ticking around. Okay, re-enter, replace my order. Error, can't replace order. Cancel my order. Error, can't cancel order. So now I'm just sitting there. I would have executed perfectly. That's a 2.5 day maker in 2 minutes. And in the end, by the time my order canceled and I figured it all out and they caught up with their systems or whatever they had to do, I took a 2-day loser. And it sucks because I didn't do anything wrong. I traded it. It would have gone great. I would have just put a big icing on the cake for a great day. And in the end, I now have a big sour taste in my mouth. And so I'm frustrated. I'm extremely frustrated. But the only thing I can do is accept that that's just the way it is. And I can complain to Fidelity. Back in the day when your trades had fees, they would give me free trades for this, but I'm not going to get anything out of it. And so all I can do is just accept that happened and that's the way that it is. Maybe I trade less tomorrow to allow my frustrations to not put me on tilt and make me do anything dumb. But just that's the way it goes. It's part of the game. So, great day turns sour. All right, we'll see if the Bulls are able to shake off this Netflix earnings reaction. But a big setback. Finally, 2 weeks without Bulls, they show up and it's convincing. And then they get crushed back down after hours. So, burden still on Bulls to shape up weekly higher lows. They've got some work to do. Appreciate you watching. Do good things. And we'll see you soon. So today's task is removing some parrot feather from this pond. And the goal is, number one, it's invasive. You can see how it takes over. But the goal is to free up the path between the incoming water and where it exits so that there is a steady stream of moving water, and that helps keep all this green algae that mats up, and it keeps it moving through rather than letting it sit stagnant and develop. So essentially I leave that section and I leave that section because I'll never be able to combat it, but pretty much from the pipe towards me the whole way down needs to be pulled up. This is a sign of a muskrat. This is one of the plants here that just grows up along the side, and the muskrats eat that. You can see here somebody's munching. The deer also like it. The deer will come around the pond and they'll actually go in the pond, only very shallow, but to get some of that stuff as well.